Hey traders, let's break down what really mattered in today's Forex session. I'm coming at you from the US, and if you've been anywhere near your charts today, you know it's been a wild ride. Plenty of movement, some key data, and a few surprises that caught even seasoned traders off guard. Big economic story of the day: UK inflation blows past expectations. The day kicked off with fireworks out of the UK. CPI came in scorching hot at 4.2% YOY, well above the 3.8% forecast. Core CPI also jumped to 3.9%. Now that's a problem for the Bank of England, which was hoping inflation would cool enough to justify a summer rate cut. This upside surprise lit a fire under the pound sterling to US dollar, which spiked nearly 80 pips in the London session. We saw it run from 1.2420 up through 1.2500 before stalling. But here's the thing, momentum faded once New York stepped in. The US dollar remains king for now, and with risk sentiment still shaky, cable pulled back under 1.2470 by the afternoon. The short-term takeaway: the market's now pricing in fewer BOE cuts in 2025, and the pound might keep getting bought on dips, as long as US data doesn't steamroll everything in sight. US data, mixed bag, but dollar holds firm. On the US front, housing starts and building permits came in below expectations. Housing starts dropped to 1.42 million, versus 1.48 MEST, which normally would weigh on the dollar. But let's be real, housing data isn't the big-ticket mover right now. The focus is still on inflation, labor, and the Fed's next move. And with no Fed speakers on deck today, the dollar mostly traded off global flows and some spillover from yesterday's sticky inflation print. Euro to US dollar chopped sideways most of the day after getting slammed yesterday. It tried to recover, pushing back above 1.0630 in the morning, but the recovery stalled. Traders are hesitant to buy euros aggressively right now, with the ECB sounding much more dovish than the Fed, and that divergence just keeps widening. US dollar to Japanese yen: the intervention watch continues. This pair is still one of the most watched trades on the board. Today, US dollar to Japanese yen pushed up toward 154.80, again brushing up against that psychological 155 level, which Japan's Ministry of Finance has all but drawn a red line around. The yen weakness isn't a mystery. Japan's yields are flat, the Fed is still talking tough, and the carry trade is alive and well. What's crazy is that despite all the jawboning from Japanese officials, the market keeps testing their patience. No intervention today, but this thing is begging for a catalyst. You better believe if US dollar to Japanese yen breaks above 155 cleanly and holds, Tokyo will be under pressure to act. So if you're trading yen pairs, tighten up those stops or stay nimble. Intervention risk is very real here. Volatility snapshot and sentiment check. Intraday, we saw volatility spike during the UK CPI release. You could feel the algo reaction within seconds. GBP pairs jumped hard, and euro even caught some sympathy flow. But outside of that, the rest of the day was more of a grind. Traders were cautious, especially in the US session, with no big data and equities slightly soft. The VIX held around 16, so not exactly panic, but you can tell the market's still digesting last week's hotter US CPI and what that means for the June FOMC. Right now, rate cut bets for the Fed are shrinking fast. The market's now barely pricing in one full cut for the year. That's a big shift from where we were 2 months ago when traders were dreaming of 6 cuts. So don't expect the dollar to roll over just yet. As long as inflation stays sticky, the Fed's going to hold the higher for longer line, and that means the greenback stays supported, especially against low yielders like JPY and Euro. Wrap up and what I'm watching. Here's the key takeaway from today: this market is trading more on central bank divergence and inflation expectations than anything else. GBP outperformed early but couldn't hold the highs. Bulls are going to need more than one hot CPI print to take this thing back to 1.27 plus. Euro to US dollar remains heavy, until the Fed flips dovish, rallies are probably selling opportunities. US dollar to Japanese yen is still the most dangerous pair on the board, lucrative, but risky as hell. Intervention headlines could drop any day. As we head into the back half of the week, keep an eye on Thursday's U.S. jobless claims and Philly Fed manufacturing index. Neither are blockbuster releases, but in this environment, anything that tweaks rate expectations can move the dollar. That's all I've got for today. Stay sharp out there, manage your risk, and don't chase. The market's giving plenty of opportunities, you just gotta wait for your setup. Catch you on the charts.